I was wondering if it was Bucky. Hey guys. So we are at open house, but we just got some breaking news and we wanted to share the updates and developments that are happening here in the Maryland area if you're not aware. So for the Calvert County buyers and potentially for the sellers, if your house is above a certain price, be prepared to understand. HUD just changed the income, not income, the FHA eligibility number from 1.2 million to it dropped down 55% to 541,000. So that means that if you have a loan in the sixes or the sevens or the eights, anything above that 541, you would more than likely need to do a conventional loan versus an FHA loan because it is no longer the eligibility. What happened? So, St. Mary's County has always been a separate entity by itself. Calvert County was lumped in with Charles County, PG County, Washington, D.C. metro area, so it got the higher limit. That is no longer the case, unfortunately. So now they are down with St. Mary's, even though in proximity, if you know the area, Calvert County and St. Mary's run very similar, parallel. But I was just speaking with some other realtors, and we had the conclusion in the conversation that we think Calvert County is a little bit above the offerings in an overall sense of the word. When you talk about Chesapeake Beach, Dunkirk, Huntingtown, you know, Justine is chiming in. Those places to me have a higher value than a lot of the spaces in St. Mary's County. St. Mary's County is deemed a way more affordable county than Calvert County, Charles County, in some instances, PG County for sure. But Calvert does give you a little bit of the southern Maryland look, but with a lot of the appeal. They have a lot of large lot properties, really, really beautiful homes. But that FHA could really change the game as far as affordability for a lot of the buyers that are coming out, where FHA is just a better option for them. The debt to income ratios match up a lot better, and it gives them more flexibility with their approvals and the amount that they pay on a monthly basis and being able to do that 3.5% down payment. So that's super important to know. The other change that I just got straight, thank Jesus for Janelle and Justine helping me along the way, is the MMP is down to 6.125%. That means that the Maryland Mortgage Program is still eligible, is available in for those who are eligible. You can get up to 5% of the sales price, but now the interest rate has dropped drastically. It's coming. It's not here yet, but it's coming. One thing I'll tell you is probably last year, I think it was like 6.8, so it was up. It was up there. So those definite. That's a big change for someone on a monthly basis, and to still get those dollars can really help a lot of people with the affordability and what they get out of qualifying for purchases in the Maryland area. But like I said, that Calvert County change is going to be a big one that we have to really hone in and pay attention to for the potential buyers and the sellers, understanding who can actually qualify for their homes, especially if they're priced higher. And a lot of Calvert County houses, in my opinion, are priced higher because of the fact of the size, the lot spaces that come along with this. A lot of acreage out there. It's absolutely stunning communities. But when it comes to Prince Frederick and Huntington, which are very built up communities with nice shopping centers and things of that nature, that is what we're looking at. So you want to take that in consideration. That 55% drop is could be a huge thing for a lot of people. Conventional, please don't get me wrong, is still an amazing program. You do need a higher credit score to approve be eligible for it. You do your debt to income ratio is a little bit tighter. It's not as flexible as FHA. USDA is another thing that is gives you that tight constraint on income and to debt ratio where you would not um, be eligible. So you got to make sure that whatever bills you have, they're in. I think USDA is down to is it 30 something percent for the back end. Don't quote me on that. I will look it up and make sure I get it right for you guys. But I just think we just should jump out there and really, really have the conversations about what's going on in the area and how that affects your home buying ability and things of that nature. Now, it doesn't mean you cannot buy a house in Calvert County that's over 541,000. It's just the FHA piece is going to be different. So you would need to be looking into conventional options. Conventional does allow down to 3%, but once again, it's all about your situation, how everything, the financing works out for you. If you want to put down more money, it's definitely an option to bring the number down to whatever you need it to be to make, because most people are trying to avoid that mortgage insurance premium where you don't have to worry about that. Um, one of my notes was who should really be aware of this. First time home buyers, move up buyers, most definitely you should be looking into this, um, seeing where you fall in the spectrum. Because I don't know if this will change the pricing points of Calvert County now that it's considered this way, but because they didn't change it across the board and it only changed in the FHA space, then I don't know how that really is going to play out in the long run. We definitely need to look at that. Like I said, it went from 1.2 million down to 541,000.
Also, if
I
they
don't I don't know why she's talking back here like she can't get in the camera.
also if you were previously approved already for the FHA, and while this is going on, it's probably a bit you want to check with your lender because that pre-approval may not work anymore.
Yeah, you might have to switch yourself to a conventional,
Hmm.
unfortunately, or come
And
up
the
with more
numbers will
money.
change.
Yeah, it's going to change. Conventional is a little bit higher, but without that mortgage insurance premium, I've seen some mortgage insurance premiums, 200 bucks, $250 a month. So I'm sorry. Let me grab this paper. It's right here. The differences. Get your notes. Get your notes. No, girl, my thighs. Pilates. The thighs are inner thighs. Y'all ever take Pilates? Please understand that inner thigh workout ain't to be played with. You gonna get your stuff. I know I do a lot of miles of walking every day, but whew, that Pilates kid gets me every time. So the differences. And the examples used, I could definitely play around with these numbers and give you different scenarios. But the FHA here is 5.625, 3.5% down. That's a $3,800 payment on the house that we're actually sitting in, which is 560. But when it comes to the conventional, they're using 20% down. Not a lot of people keep 20% down. That's not the norm for most people. Um, if you're not coming out of something big and have a big lump sum of money, you usually don't have that kind of money. But the the interest rate they're using is 6.325, and that's the conventional. It takes you out to 3,200, which is a $600 difference. But once again, you're putting down 20%, so that's 100 and at least 12,000 that you're dropping to get the payment down to that much. So do you eat the FHA payment and go that way? But once again, in Calvert County, this house would not be eligible for FHA. 560, and it's down to 541. Once again, I got notes. I don't know this stuff off my brain. Trust you me. Um, so, is this a cause for concern? To some extent, yes. But is that a dog? Is that a dog? You hear something barking?
It might be on there.
Yeah. Oh, it is. It's a dog next door. Sorry. Yeah. Everybody who knows me know I'm ready to run. I am ready. If you hear a dog bark, I gotta go. I cannot sit here. But just to let you know, just to give you those two updates that we found out. First and foremost, the Calvert County area, the FHA eligibility has dropped from 1.2 million down to 541,000, which is a 55% drop. And the Maryland Mortgage Program, the new rate is 6.125, which is significantly lower. Please stop telling us that you're waiting for the 2 and 3% to come back. Y'all not getting that.
Even they also need to know.
There she goes. She got to come back in the front. I'm gonna tell y'all why she don't want to get in the camera. Because she been on green like me today. That's why.
And I was
She don't
gonna
want to
put
be
my
the
green.
Bopsy. She don't want to be the
almost had
Bopsy. She don't want to be the Bopsy twins. So she don't want to get in the camera act like she don't know me.
Oh goodness. So another thing, as the rates drop, everybody waiting for the rates to drop, but
Ooh.
the house is up. The house
Ooh.
cost goes
Girl,
up.
say that.
So while you had a lower cost to buy the home, but your rate was higher, you wanted to wait for the rate to drop. Now the rate has dropped, but the house is up there higher. But you could have just got it first and then refinance.
Or you could have came, like right now, this is the time to buy. I don't care what that interest rate say. This is the time to buy because the competition is not steep. It's a lot of sellers putting their houses on the market. The competition is not steep. I have enough listings to be able to tell y'all. The competition is not steep. People are being super, super picky. They're being very analytical. And my thing is, you can come in and ask for things. You can ask for closing help. You can do a full inspection. And there is some concessions that the sellers are allowing. People are ready to make a move. So they need the buyer on the other end to come in and help them with that process. So my thing is, if you're thinking about buying and you're eligible for different programs and different monies from the state, from the county, whoever it may be, take advantage of those opportunities. If you can keep your money in your pocket, I want you to run, and I mean run, and go get you a loan. Make sure your credit's all together. Have you a couple dollars to be able to put something down as an earnest money deposit, pay for your inspection, pay for your appraisal, but make sure you have something and you're ready to rock and roll. Do you need the whole kit and caboodle? We could probably work that thing out. Trust you me, we could probably work it out. But for right now, take advantage. Don't wait for these 2 and 3% interest rates. They're not coming back. They're not. That is wishful thinking. From my understanding, we're looking at probably 5.9 right now. Will it get to the mid fives? I don't know. We'll see. No one has a crystal ball, but I did hear that Dr. Lawrence Young, who is the chief economist for the National Association of Realtors, predicted a 14% increase in homes sold this year. Now, a little bit of that has to do with people finally just letting go and ready to make a move. And a little bit of that has to do with the number of agents that will probably leave the business. I just paid my dues, so I'm not going nowhere. They got my money. So I'm going to be here. I don't know what nobody else did, but baby,
Yeah, we need to get that back.
I need all mine back. Them dudes, we pay to play. We pay to play. So trust you me, I need all my coins back. So I will be here in 2026, and we're gonna push for 2027. But the numbers are supposed to be up. In all seriousness, the numbers they say he's projecting a 14% increase in sales this year. So we about to rock and roll, and I'm ready for it. Justine is ready for it. We're about to hit the ground running. If you guys have any questions about what's happening in the market as far as affordability, different programs that are available, we have amazing resource partners that give us inside tips, and we come and share them with you. So I hope you guys enjoy. If you have any questions about this Calvert County thing, if that's an interest of yours, or if you want to know more about the Maryland Mortgage Program, please don't hesitate to reach out to us. Have a great one. Bye, guys.